The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to a beautiful April 8th. At the headquarters of Technical Trading and Investing, it is TFNN.com with your lovable and squeezable host. That's me. I'm so soft and cuddly that I'm like that little snuggly bear for the laundry softener, wrapped in a rainbow, riding a unicorn. I'm just about, that's how soft I am. Just a big, lovable fuzzball. So anyway, your host, David White, Monday through Friday. It's been a week since we've talked. We've got a ton of news out here, and today we're celebrating the 30th anniversary of the cell phone. The first brick phone from Motorola, first real portable phone, out about 30 years ago. It actually probably gained true cult status in the movie Wall Street, where it was first really shown, because basically it was $6,000 the first year it was available. By the time that Wall Street came out, it was $3,000. But with the exception of a very small area of Chicago and larger areas of New York and L.A. and New York City, there weren't a lot of places for you to use it. But it had actually been shown early in the late 60s. So, first time that they actually came up with it at Motorola, and it took almost 16, 17 years or so. Yeah, pretty good. Well, you can turn that air conditioner off if you want. So we'll have the ball guy. It's just like tennis, where the ball guy runs across the room out here, and everybody says that it sounds like I'm outside. I'm not exactly sure. So we got this is the guy that wears the funny hats and funny clothes that we're normally talking about. So he's turning it off, and he's out of here. He has to get into the shop once a day, just whatever he has to come up with. But it is a nice day, 30 years of cell phones. Other things in the news. Facebook Home came out last week. I had some emails about that asking me if it was a big deal, and I'm going to say no. The Facebook Home project is basically a wrapper around Android to basically short circuit any calls to Google Phone and Google Voice and Google Maps, so that they can snag it all. I don't think it's going to go very far. It's kind of a lot of these things are kind of Hail Mary attempts for Facebook to react to its investors. And make them think that they're at least trying to do something to capture mobile traffic. I think it'll happen, but it's probably not much about Facebook Home, although the Facebook Home actually was leaked this morning, and some people actually have a kind of faux version of it that they're playing with out there in the community. Also, probably if you had not noticed, that the FCC and SEC had come out and said that Twitter is an acceptable form of dispersing market information for market participants, i.e. companies that are public on any of the exchanges in the United States. Bloomberg is the first to go ahead and put it into their data feeds. I suspect we'll see other ones like that. Arrow, we talked about them last time I was here. Arrow is the company from, what's his name? Got my notes out here somewhere. Barry Diller. And it is the week of National Association of Broadcasters. It's something I went to for 14 years. It is, all the broadcasters get together. He's out there trying to soft pedal his Aero system. For you that are new to the show or haven't heard about it, Aero is a small box. It has an antenna of its own. It is a kind of a DVR interface, and for $8 a month, if you want to cut the cable cord and just watch everything on the internet, you can. It will record on-air television programs and play them back through the internet for you. So it's pretty cool. Anyway, a judge ruled in their favor last week. They ruled in their favor again today. There's yet another ruling coming out, I think either later today or tomorrow. But it looks like they've won, that just because the recorder is not in your house doesn't mean you can't pay somebody to have a recorder. The legal definition is that they are not redistributing the content because it's basically an antenna hooked to a device that they are renting to you. Kind of an interesting idea. And anyway, Barry Diller's out there pushing that. Hulu's up for sale. And we're looking at a Fox executive offering $500 million for it. Just 2 months ago, Hulu was valued at $2 billion, though. The question of what it's really worth has a lot to do with how many people stick with it. A consortium of CBS, Fox, and some other broadcasters, if you can basically get something like that for $8 a month with Aero, does it really make a lot of sense to have these on-air broadcasters? And, you know, you can kind of see where they're at. They're kind of upset that they're losing control. Actually, Fox has said that if Aero goes through and is found to be legal, that they will go cable only. I have a sinking sensation that may be a little bit of sophistry out there. But what do we else have going on out here? Bitcoin hit $195. We were talking about that last time I was here. Talk about a gambler and gambler mentality. Every day I wake up, I start thinking more of this looking like the top of the dot-com bubble. Sock puppets, money backed by absolutely nothing. It's not even fiat currency. It is a kind of money backed by literally nothing. But I don't know, maybe that's more honest than a promise of full faith and credit in a country. What else did we have going on here? Xbox. It looks like the launch of Durango, which is going to be what a lot of people are calling Xbox 720. The next version of Xbox will be brought out to the public in the first week of May. Confirmation is that to have an Xbox, it will have to have, play games, will have to have a constant connection with the internet. So no longer will you be able to just put it on. The other thing would be that once you set an account for a game, that game and that serial number will be recorded. You will not be able to resell that game. So a lot of people are kind of interested in thinking about what the future of GameStop is when you can no longer resell games, and you have to be constantly connected to the internet and have a valid account to play any of the games. What else do we have? The Keystone Pipeline. There is a deal in effect right now, so you might be looking at people that are in that area, companies in the pipeline community. Apparently the deal is the Keystone Pipeline will go through for higher emission standards that will probably be ignored one day. And it may just be the political cover that President Obama is looking for to get that through. But according to the political side, that the deal has pretty been much been made. Today is also 365 days to the end of XP from Microsoft. What we are going to look at is if you need to download any patches, if you need to reinstall a version of XP, the license servers will no longer be there. They will no longer host the old files for XP. So if you need anything, if you need any of the patches, if you need any of these service patches. I'm sure somebody's going to come out with something so you don't have to have that will allow it to be a valid licensed copy, even though it's not, of XP after that. But we are in the last year, 365 days till the death of Windows XP, originally shipped in 2001. Toyota is talking about solid-state batteries, and more of a Tech Insider thing. They are pumping a solid-state battery with a solid anode and cathode that would not degrade. It would not also be temperature sensitive, i.e. Half the power at 20 degrees as you get at 85 degrees. And of course, I think you get about 70% of power at about 110 or 115 degrees on a regular battery. And the lithium-ion batteries. But they're making a lot of noise about batteries being way too expensive. They do have some battery technology that they are pushing. And my question, we were looking at Tesla coming out with announcements last week. I was wondering if they were coming out with some version of a newer battery that would get the kind of length that you wanted to get out of driving range, but no such luck. After the bell tonight, we've got Alcoa. It is the first of the parade in earnings. It looks like we've got an S&P. Let me go back here and check it real quick here. At 1556, is that what it is? 1558. So we're having a little bit of run up here to Alcoa's earnings. Volume is light, 1.8 billion shares again today. There is a cybersecurity bill. A lot of people thought that maybe this would run through today, and it looks like the president is threatening a veto. There were another ton of really horrible things in this, and why I agree with almost nothing the president has to say. At least he's doing the right thing on this one. What else do we have in here? Bitcoin. Pretty much all my notes of what's going on out here. 3D printer. Game of Thrones. 3D printer, week of hacking. That's pretty much it. We've got about a minute and a half here. We're going to get into some other ones. I wanted to look at Alcoa here real quickly. Looks like it's pretty much bottom for the most part. Sure looks like it wants to come back and test the $7.98 level, but energy has not been really tamed to the downside, but certainly the last major leg down, it's let's say tapered off out here. But if we look at anything in both copper or the copper companies out here, SCCO, doesn't look like that's much changed. Alcoa also looking fairly interesting. Southern Copper, of course, on Friday had just a huge day with lots of volume to the downside. It did break the previous low, and I suspect that we're probably going to see more weakness out of copper shortly. The November 15th low on SCCO was $33.06 with 1.9 million shares. We went, well, actually had not, what are we, about 20 cents higher, 19 cents higher. I suspect we're going to get back into that fairly quickly over the next few days. We'll be back in just a moment.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
We're going to go through some other stocks. We're going to go through some other stocks here fairly quickly. We were talking about Southern Copper, AA after the bell. We'll get into a lot of earnings this week. Over the last week, we've had some huge disappointments. FFIV was one of them last Thursday. It fell out of bed. Still fairly low out here, making a lower low today. But as all these with huge volumes and huge gaps, normally what you set up as an exhaustion move, it takes a little while to get moving on these. But just about every one of the stocks in Techland that had anything to do with networking and or routers is lower. Cisco was off real big on that. It recovered a little bit of there, but up on lighter volume and actually pulling back into the same candle that we had in there. When we look at other stocks like Apple, not really doing too much out here. It is kind of in a nice support range, but no one's really climbing into Apple with any significant amount of strength. Light volume again back today. It did get just a short time back above the 435 over the last week or so of trading. That's kind of resistance now. 425 is kind of support, and maybe we're setting up a consolidation here, but not a lot to hang your head on Apple so far. AECOM Technology was looking at this one in the newsletter today. Kind of a nice little test, a shorter test out here, but not much of a move, and again on very light volume. So a lot of these stocks that should have popped a little bit better out here have not done much on this move so far today, at least in technology. Just want to update it, see if we get anything going on. 1557 on the S&P cash, just under 1.9 billion shares. So volume again just pathetically low at these highs. Not a lot of people wanting to go up there and commit up at these higher levels, but of course every time we pull back 10 points, everybody thinks that they must buy. You know, can we go 10 points higher? Yes. 15 points maybe, but the risk of probably being open up 50 points down one day. So I'm going to continue to be on the south side of the market here. Akamai Technologies, another one that blew itself apart in earnings last time, and it is finally getting back to these lower levels in support. Again, another one that does a lot of work for cloud storage systems. AKAM, last major low out here was $33.55 on that huge exhaustion day. You get what Wyckoff called the automatic rally. That is one without any preparation. It's came back basically twice into that $38, $39 level, and just not a lot of volume. This is where we're probably going to start to see a possibility of consolidation in some of these stocks. AKAM is the symbol, but $33.55 on February 7th with 27 million shares. Got back into that on Friday with 4 million shares. It's not a bad looking setup here, but if we do break out, there are a few stocks out here that do look fairly interesting. AZO is another one here that I'm watching closely as a indication of the market. It is just a little shy of the volume needed to break out. The last major high on it was April 30th of 2012. Basically, what, 250,000 shares. We got into it with 250,000 shares. We had 210,000 shares up to 402.09 on April 4th, but just not a lot of juice pushing a lot of these stocks. You would think that if we are really selling as many new cars as they are saying, that AutoZone would probably be somewhat weaker here on new parts sales if these many old cars are getting off the road, but it really can't tell it from AutoZone. Average life of a car out there on the road right now, our average age is 11 3/4 years, and I don't see that actually coming down. Since Toyota started making better cars that don't rust out, people drive them a lot longer, and starting to see. We talked about corn last time we were here, and it has continued to move down. And let's see, what do we have here? I got about 30 seconds. It is back finally on the at least commodity trust, back to some of the gap levels that started the huge move up last year. Really strong volume. Last few days are exactly what you want to come back in and form a bottom, which is a light volume after the huge few days down. But you might keep an eye on that. CORN for corn. We'll be back in a minute.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we come back, we're going to go through some of the movers out here. Large cap losers, probably the most, mid cap. Most interesting is Monster, MNST. And it was mentioned positively. It is Monster Beverage. They've been under a lot of flack for their high caffeine beverages and high sugar power drinks, up on lighter volume out here, but still well within a trading range and a asymmetrical triangle. This thing is not busted out one way or the other. Volume is not all that great so far today. Other stocks of interest is Zynga, ZNGA. Kind of a 1-2 punch, negatively mentioned in an article over the weekend. and also being sued. The executives are all been named in a suit saying that they knew coming in that it was going to be problematic. And let the principals sell way too much stock in the company for those that bought it compared to those that bought it at the IPO price. I suspect the chart really looks like we're probably going to get back into that $3 range for this company. They have a lot of stuff brewing, especially in England, for online gaming, and gaming I mean for money gaming. But it still is unclear whether or not Zynga will be able to match up with any of the companies in Las Vegas. Of course, the Speaker of the Senate, President of the Senate, is from Nevada, and he's going to probably work out a deal to get this hammered through. But the question is, do you want to partner up with somebody like Zynga, and what kind of cut are they going to get? My guess is it is going to be slim. Let's see, what else do we have out here? I did want to take a quick look at others. What do we have? Gold fell $3.40 to $15.72 an ounce. We also had silver off 6 cents to $27.16 an ounce. May copper rose 2 cents to $3.37. Again, not much going on with copper. I suspect that copper is telling us the true path of least resistance for this marketplace, but we'll know over the next couple of days of earnings. There were some other stocks that were interesting me. If we are making some kind of low out here, everybody's been wanting to wait to buy Michael Kors Holdings, KORS is the symbol on this. This is finally back into some level of support, but unfortunately, like a lot of these companies, maybe have pulled back a little bit more. You would have liked to have seen support come in at the previous November 2nd high at $58.62. It kind of blew back through that and got to $52.60. I suspect we probably will see it get back into that range and test it once again. Maybe if all the volume comes out, this may be a company to start looking at. IBM is another one. We talked about it looking like it had set up a false breakout. IBM, let's see if I've got a current quote for it here. Low 208s. Let me update it here just to make sure I'm looking at it correctly. Where's IBM? Yeah, 208.28. We've been watching this high, the previous one of the October 5th of last year, 211.79, 2.8 million shares. We commented that the volume basically had decent volume for about 1 day out of this thing, and it pulled right back into the trading range. It tried to break out yet a second time. It's now definitely back in the trading range. Almost all these technology stocks are seeing some level of weakness. Google, we've been talking about it pulling back into that 730 mark and maybe down as low as 710. Continue to see that it looks like this is setting up for that fairly decent pullback. Of course, this is not doing any of the rest of the tech stocks any good. They continue to be the weakest sectors of the bunch. The J&Js, the big quote, safe companies seem to be continuing to get the bulk of the cash out here, but not a lot of real strong volume. Friday I had a very decent volume in Google, but not so much or so far today. But I suspect we've got a good chance of at least hitting 730, and at that point Google may be a option to go long once again if it continues this low volume pullback. What else do we have out here? Midway Gold, we continue seeing gold miners out here hitting some lows on fairly light volume. Midway Gold, MDW, 107, $1.07, and that was on August 8th. you had 640,000 shares. Came into it at 105 on March 8th with 460,000 shares. Kind of spiked down through it on Friday with 340,000 shares. A lot of these things look like they're priced to go out of business, and it is going to be somewhat tough. Another stock that's making lows, and I'd be kind of interested in, is Sterlite Industries from India. SLT is the symbol on it. It is banging against its June 4th lows of last year at $6.42. 870,000 shares. Got into that pretty much with 340, is that about right? 340,000 shares today, and 560,000 shares on Friday, 700,000 shares. So getting back into these lows fairly light. It has pierced it. You'd want a close and continued light volume and a pullback and actually a rejection of these lower prices and back above $6.42. There's stocks of interest. Scripps Network Worldwide. It looks like this one is another one in the line of false breakouts. SNI is the symbol on it. Of course, the Scripps Networks is the broadcast chain out there. SNI, last major high, $66.33 on October 19th. 2.4 million shares. Going to be extremely light on that today. Look for a pullback into $66.33 as a sign that this was yet another false breakout like IBM had. Standard Pacific Corporation, this thing had made a couple of highs out here on lighter volume. Still not much coming back into it, but $8.69 of the February 1st high. Almost 10 million shares that day. Of course, she came into it with almost half that on the March 20th high, and it's pulled right back into this trading range. You've had 2 days and okay volume, but again, you're bucking up about 10 million shares. This thing does not look that strong. Other stocks, Samson Oil and Gas. Some of these stocks out here have been kind of bouncing around these lows. If you're interested in a penny stock, this one's very interesting. The 49-cent low set on November 19th of last year had 820,000 shares. Had a nice big run, which is exactly what you're looking for. All the thunder and fury of a stock out here, and it's slowly consolidated out here to the side. And as long as you continue to close above 49 cents out here, you might want to be looking at this if you like penny stocks. TAL International TAL is the symbol on this one. Had a nice breakout, huge volume to the upside. It is slowly pulled back to the support level. The May 3rd of last year, $42 with 370,000 shares. You basically had a huge breakout on the 14th of February with 1.1 million shares. It is kind of gapped back down, filled that gap, pulled back into this $42 level, and kind of an interesting company out here. Let's see, actually get that one. But this is kind of chart you want to be watching. This thing could be a mover. TAL is a leasing containers and chassis worldwide. The company operates in two segments: equipment leasing and equipment trading, and is involved in the acquisition, leasing, releasing, and sale of intermodal transportation equipment, including dry freight containers and cargo vessels. So kind of a nice little pop out here in some of that same space we were talking about, the dry bulk shippers. That is one to keep an eye on. Tech Resources, TCK is another one out here, and I'm looking at two attempts to break through the previous low. The low I'm looking at is the the July 25th low of last year, 261.41. It came in there with 6.3 million shares. Pierced it on September 5th on half the volume, popped right back into the trading range, ran up to 38.57 on January 10th. It's back down into this lower range again here. This may be a nice stock to catch a nice channel in here. 2.7 million shares on Friday, which and it's popped right back into the trading range. Tech Resources, let's go ahead and make sure what they do. That is exploring and acquiring and developing products for natural resources in America's Pacific and Africa. Copper, including copper concentrates, cathode concentrates, steelmaking coal, and zinc. And maybe these are just setting up bigger trading ranges out here. One of the interesting things, I wanted to look at this chart because I heard this just coming in. Buffalo Wild Wing, BF. Is it BF, BL? Yeah, let me check it here real quick. I can't remember. BLDW? Buffalo Wild Wing. BWLD. WLD. That chicken wing prices have absolutely plummeted. I figured if I looked at this chart, we'd see it actually in Buffalo Wild Wings. And this thing is very close. I don't know what the earnings date is on it, but I figured this thing was probably getting very close to testing these highs. But it needs to get over $94.81 for the next big breakout. And energy, this last movement hasn't done that well. But I did hear a report that actual buffalo wing cost has dropped 20% since the 15th of January, and the biggest drop ever in the price of chicken wings in such a short time. But you can kind of see it coming up. Energy, okay. Maybe it's going to go back up and test 94.81 yet again today in the near future here. Thor Industries, this is one that I'm watching if I am wrong, and we do turn around in this marketplace. This is a kind of pattern you like. Energy, 2 attempts back down. Volume has been fairly light. It popped up on September 27th with 1.7 million shares. It came back into it on December 6th on 500,000 shares, 540,000 shares on Friday, and it's back into that trading range. Thor Industries, let's get the profile on this guy too, out here. Design, manufacture, and sale of various recreational vehicles, small and mid-sized buses, as well as parts and accessories in the United States. So, kind of interesting. Thor Industries out here, looking at pretty good support at this $36 range, and you'd have a trade back up to the $44, $45 range, which doesn't look all that bad out here today. I wanted to see what else we had. We've got about 2 minutes left in this segment. I haven't asked, but you can give me a call at 877-927-6648, 877-927-6648. I haven't talked to you all in a while, so I'd love to have a phone call during the next one, and thank Mitch and the room in there for putting Buffalo Wild Wings up. Other stocks that I wanted to look at, let's see if I could go back and take a look. We looked at Apple. Wanted to look at Microsoft. Especially, it didn't bring it up, but it's moving up fairly decently off the last low at 26, which is the December 5th low. Everybody was writing some fairly decent articles basically slamming Microsoft over the last several days, saying it was the end of Microsoft. A lot of people are actually coming back. This is not a bad looking chart out here, and looking for support in that $27 range. Again, we talked about it in the first segment, that they're going to be pushing the new Xbox for this Christmas, and business is not all that bad, even though they've pretty much sucked eggs on both phones and on tablets, and neither of those efforts have really gone very far. So, I wouldn't be short this company, and this is for the reason there are a lot of long knives out for Steve Ballmer. My guess is that if this does not show considerable change by midsummer, he could be out of this thing. And if it did, look for Microsoft to pop $2 to $3 on the news of Ballmer being out as the CEO in this company. Again, got just a little time left in this last segment. Give me a call. 877-927-6648. That's 877-927-6648. And I'd love to talk to you in the last segment as I'm getting all caught up here from being gone for the last week.
Are Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
I wanted to look at Intel. I know that we had one of our listeners wanting to buy this, and I said, just a little bit more time out here. We're still looking at that $19 level. Just no movement in it. What worries me more is the longer list of tech stocks out here that are continuing to sell off. We talked about Google. It's still within a couple bucks of its low today. No real love for it later in the day. IBM, of course, off a buck, well under that $212 area was a previous high. It's not selling off in droves or anything, but we continue to see a market getting narrower and narrower in what everybody thinks is the safest stocks. One of the guys that has been perennially wrong, but is kind of interesting, has a few good points, is Joe Granville. People kind of make fun of him as wrong way Joe. I guess if you're a bear every single day and over 20 years, you're eventually going to be right, and he has been on occasion. But probably the biggest thing that he said is that in the top of a market is very much like the Titanic. Everybody gets off the front of the ship and they move to the back of the ship. And eventually the back of the ship breaks and everybody's on the back of it and they think, okay, we'll be okay here for a little while longer. And then basically the back end of the ship all sinks too. And that's pretty much right. Everybody will run to safety. And what you look in the stocks moving out here today are the ones that are considered the safest. Companies like IBM, Apple, and Google. All the tech stocks out here not doing too well. Microsoft off 18 cents, not too bad. Intel pretty much flat. A lot of these stocks just not getting any of these love or any of the love out here in this marketplace. Continues to make me think that we are very close to a previous high. I suspect by the end of the day we close flat. We're up, what, 4.5 points today. I think we're probably going to close around 1554, 1553, something like that, and we'll see how this works out. But 2 billion shares on the consolidated New York Stock Exchange tape. As we come back up here and press these highs one more time, we're going to have the biggest blowout that Alcoa ever had to actually do anything for us in the morning. I'm actually thinking that it will be a non-event, and we're going to go right into earnings. And with the parade of companies like UPS, FedEx, and others telling us how weak Europe is, I suspect that we're probably going to get confirmation that what we already know, and that is that Europe is already in a full recession, and we're going to get the kind of movement out of that dollar that one day is going to rip the eyelids off of people that continue to think that the dollar is headed lower. What do we have out here today? It's up 24 cents. Not that big a deal. It's been bucking up against the $84 level on the dollar index. I suspect that the next time up here, we're probably going to jump the creek, and we could have a $1.50, $2 move in it all in one day, and everybody would probably be a little shocked. It's kind of what I'm expecting out here. Continues to be a market with extremely light volume at the top, and that lets me know one thing, and that's to be extremely scared. Everybody is extremely complacent in this marketplace. I have yet to find a lot of people really yelling and screaming, sell. There's a few people, but they're mostly permanent bearers out there. Anyway, make sure and give me a call tomorrow, 877-927-6648. Of course, I'll be here all week, 2 to 3. You can call me, same BAT channel, same BAT time, and same BAT phone number. So just make sure and give me a ring tomorrow, and we'll look and talk about stocks and earnings tomorrow.